Well, we're pleased to welcome back into the program the owner of the State Farm Agency in National Hills, Keith Perret. How are you, sir?
I'm good. How are you doing this morning?
I'm doing fantastic. We're so price conscious these days because probably inflation, we're just paying more at the supermarket, we're paying more at the gas pump, everything. But I've often found sometimes when you price shop, it's a race to the bottom and it's a commodity. Mm-hmm. And so I want to see if you can explain the difference between cost shopping and maybe the value that you get, the value of education.
Yeah, and I think it's important to understand in our business that it's not one size fits all.
Okay.
You have to look at everybody's individual situation. But when I write up a policy, whether it's a homeowner's, whether it's auto, whether it's life, I'm gonna present it to you like I would if you were my mother or my sister or my brother or a close friend. Mm. You may not go with what I recommend, but I'm going to recommend what I believe to be the best scenario for you.
Sure.
And then we can talk about it from there because, I think it's important that we do that. I think it's important that we give people the advantage of knowing this is really what you need. This is the risk that you have. And it becomes a risk-reward situation for a lot of people. How much risk can you tolerate?
Right.
For example, if you're carrying state minimums on your autos, what that basically means is you have $25,000 per person per accident for bodily injury, and you have $25,000 in property damage.
Mm-hmm.
Well, what if you are driving down Washington Road over by I-20, which mm-hmm. we call it the gauntlet, right?
That's right.
But let's say you're driving down there and you hit somebody. They mm-hmm. pull out in front of you, you don't see them, you hit them, and they get hurt. And there's a mom and a small child in that car.
A lot more than 25,000.
Yeah,
right?
I mean, we talked about it earlier. We're a very litigious society. So mm-hmm. by the time you take an ambulance ride, go to the hospital, have procedures, you get a lawyer involved. I mean, it could easily come back. Let's say it comes back at $100,000 for the mom and $75,000 for the child. Well, if you're carrying state minimums, you got $25,000 per person with a $50,000 max. So that's on the mom $75,000. Your insurance company is not paying. On the child, it's $50,000. So now you got $125,000 that you're responsible for.
Whoa!
Because you wanted to carry bottom level limits and be cheap.
And all you have to do is just spend a little bit more money and raise your minimums.
It's literally one of those things that when you need it, you're going to wish you had it.
Mm-hmm.
Same thing on property damage. If you got $25,000 and you hit a beater and you wreck it, you're probably okay. But if you hit a brand new Mercedes that hits a brand new Lexus, that hits a brand new Jaguar, you're going to be in trouble. Because if you owe $300,000 because of a wreck, that's a life changer. And oh, by the way, in the state of Georgia, they can garnish your wages at 25%, and they will. They're not going to just let you walk away from this. So I think it's important that people understand the risk they're taking when they carry low limits.